Hello everyone, you're welcome. You're welcome to another session with Tech Chris. It's Tech Chris here, and in today's video we'll be talking about liquidity and internal and external range liquidity, how you can actually use them to catch very good entries. So I want to actually believe that everybody who's actually watching this video has familiarized themselves with what liquidity is, the basics, the concepts. Basically liquidity is what drives the market, is what the entire price action you see on your charts is just the market's intent to seek liquidity from both ends. So if you actually see price moving like this, let's say in a classic uptrend, the intent of the market is to take liquidity from this high, the external range, right? Something like this, and then to also take liquidity from any of the internal range liquidities, and same thing continues just like that, right? So the intent of the market is to seek liquidity from both ends. After market has taken liquidity off the external range, market seeks to take liquidity off the internal range, right? So we're going to actually be looking at a few examples. I talked about that everywhere on your charts, but I'm going to show you a few examples. Now I actually want to let's look at it in this way. I think in the last video I told you, if you actually see a break of structure must have the body of the candle close above the external range liquidity. We want to see the body of the candle close prominently above the previous high. So but in a liquidity sweep, what happens is that price actually just wicks above that external range, just wicks above it, and then retraces backwards, right? So we actually want to see in the higher time frame that price actually wicked the higher time frame and then retrace back. If the candle closes above the external range prominently, then it's not a liquidity sweep, right? So we can actually have something here on AUD USD, a very clean example. This is on 4-hour time frame. So we actually have our FVG here, right? And the consequent encroachment, which is this middle line. I think that was where price actually reacted from. Price reacted from the words consequent encroachments, right? So, but let's say we did not see this FVG. Let's ignore totally this FVG. This is how you can actually catch, this is how you can actually catch a proper liquidity sweep on AUD USD, right? So you can actually see that markets actually did something like this, right? And then sorry, remember what we said about liquid highs, that a liquid high must have taken liquidity off the previous level. So price broke this level, right, making it a confirmed high. So this high now we can actually confirm it to be an inducement or liquidity, right? And then what happened right after? Market actually took liquidity off that high and then steered upwards to actually doing triggering the consequent encroachment of the FVG there, right? So let's move down the time frame. And see what we can actually build from it. You can see that the market actually wicked. The market did what? Wicked. I think I should change this to. You can see that the market actually wicked, that particular high. This signals that the market actually did take liquidity off the high, right? If the market had just closed above it, then we should actually be looking for bullish entries, right? If the market had closed above it, we should be looking for bullish entry. And overall, the structure of this particular pair is bearish, right? AUD USD was actually very much bearish, right? So on a very typical day, this would not give you room for a change of character. Like those persons who actually trade change of character, this would not give you room for a change of character, right? This will not give you room for that. So let's go down to the 2 hour. Now I like to look at it in this way. I posted something. I was like, if you're going to enter a trade like this and you're sure you have confirmed that it's a liquidity sweep, price actually just wicked above that level on the high time frame, price has tagged possibly an area of value or whatnot, and you actually want to trade this particular thing. Now some persons will be waiting for change of character, COCH, and they may not even actually find, because the market, after it has taken liquidity, automatically what dumps down to seek liquidity from the other end. So you can say that after market did that, markets came here, took liquidity from this particular level, took liquidity from this particular level, and then this particular level too, right? So I like to look at it in two ways. If you want to enter conservatively and if you want to enter aggressively. Now, if I want to enter aggressively, I want to actually see that after price has taken this particular high, price closes below it. You can see where price closed. Price closes below it, right? Price closes below it. Once price closes below that particular level, I will just set my entries automatically, possibly just enter at market. Just enter at market entry, right? Just enter at market entry immediately, and then possibly target the next internal range with your stop losses above the high that was actually wicked. With your stop losses above this high, right? Stop losses above this high. So this is a more aggressive kind of like entry, right? And you might also be very unlucky on a very, very bad day. Price actually takes you out, because nothing is ever 100%. Nothing is ever 100%. Price can actually still do something like this and then just come here, tap on this zone, and then continue moving. But then if you want to look at a more conservative approach, then we should actually be looking at taking entries from an order block after price has swept that liquidity off. Now, some persons will this actually happens very quick. Whenever this liquidity sweep happens, the reversal happens very quick, because after price has taken liquidity off this level, price seeks liquidity at the next level. The same thing happens at the previous day high and previous week highs. When price actually takes liquidity off those levels, price seeks liquidity where in the next level below it, or reverses to take liquidity from the next level below it. So it happens very quick. Your COCH may not actually just work here, but on some occasions you might still see it, right? If you actually move down to 1 hour, 1 hour, 1 hour, let's say 45 minutes, right? 45 minutes, 30 minutes. Although I saw something on the 1 hour, but I just want us, okay, on 30 minutes now, consider when price actually closed, price left us with another block, right? Price left us another block. And we can actually mark out this other block from here, from top to bottom. And you can see what happened when price actually, when price actually closed below. When price closed below, price came back up to fill the other block, and then boom, right? Now, to say that this happens very fast, if you do not actually catch this other block, and let's say you're on the 15 minutes time frame, right? Let's say you're on the 15 minutes time frame, and then you're now considering this, maybe you did not see that on the 45 minutes or the 30 minutes price has really triggered the other block, and let's say you're targeting this as your other block, right? And then you're saying liquidity is now going to be this part, or inducement is going to be this, right? You may likely miss entry because price will not even get back there. Price is actually seeking the next level immediately, and there will be no time to start looking to go higher, right? Price just keeps dumping. You can see what happened. Just keeps dumping straight till it takes liquidity off those levels. So the best would be to actually, look for the most immediate order block. The most immediate order block printed, and then enter from there. If you target this low, right, target that low, you should actually be in for crazy cash, right? You should be in for stupid money. So this is like a 6 hour trade, very easy one. I caught this on, I think this was yesterday or the day before yesterday on AU, because it was too easy. It was just look and shoot. It was right too easy. So that's it for this particular video on AU. I'm going to show you something else on NZD, Euro NZD, and then GBP AUD. Right? See you guys in that video.